Trends, support and resistance lines, and technical indicators look much different on a 1-minute chart than they do on a daily chart. For example, you may look at a 1-minute chart of the Euro-US dollar and see that the pair appears to be in a downtrend. If you switch your chart to a daily chart, however, you may see that the currency pair has been in an uptrend for years. So which chart is right? Is the Euro-US dollar in an uptrend, or is it in a downtrend? The answer is both. It is in a downtrend on the 1-minute chart, and it is in an uptrend on the daily chart. However, the trend of the longer-term chart is more established than the trend in the shorter-term chart. Successful forex traders tend to trade with a bias toward the long-term trend. They know that it will take a much larger market force to change the direction of a long-term trend than it will to change the direction of a short-term trend. Regardless of which time frames you trade from, short-term or long-term, you should always be aware of trends and levels of support and resistance across multiple time frames. This enables you to identify how strong various trends and levels of support and resistance are. You should consider analyzing at least 3 charts or time frames in your technical analysis: a trend chart, which is a longer-term chart, a signal chart, which is the chart you typically use, and timing chart, which is a shorter-term chart. The trend chart is a longer-term chart that helps you identify the predominant trend you should be looking to trade with. If the currency pair in the trend chart is trending upward, you should be looking to buy the currency pair. If the currency pair in the trend chart is trending downward, you should be looking to sell the currency pair. You can choose whichever time frame you would like to use for your trend chart, as long as it is a longer time frame than the time frame you use for the charts you normally trade from. For example, if you typically trade the Euro-US dollar looking at a 1-hour chart, you should consider using a 1-day chart for your trend chart. If you typically trade the Euro-US dollar looking at a 15-minute chart, you should consider using a 4-hour chart for your trend chart. The signal chart is whatever chart you currently use to make your trading decisions. It provides the trading signals that tell you when to look for buying and selling opportunities based on the trading methodology you use. The timing chart is a shorter-term chart that can help you more accurately identify when to enter and exit your trades. Let's take a look at what a high-probability trade setup looks like using the multiple time frame trading approach. We will be looking at an example of the Euro-US dollar using a weekly chart as the trend chart, a daily chart as the signal chart, and a 1-hour chart as the timing chart. First, you look at your trend chart to see what direction the currency is trending. As you can see on the Euro-US dollar weekly chart, the currency pair has been in an uptrend for some time now. It would be foolish to fight this trend and try to sell the Euro-US dollar. Next, you look at the signal chart to identify an appropriate buy signal for the Euro-US dollar. In this example, we are looking at using the Commodity Channel Index, or CCI, to generate the trading signal. You can see on the daily Euro-US dollar chart that the CCI gave a buy signal on 10 October as it crossed from below -100 to above -100. The trend on the daily Euro-US dollar chart was also moving higher. Lastly, you look at the timing chart to identify an appropriate time to buy the Euro-US dollar. You can see on the 1-hour Euro-US dollar chart that the currency pair is in an uptrend at the time the trading signal was given on the signal chart. You can also see that the CCI on the 1-hour chart had just given a buy signal at approximately the same time the CCI on the signal chart had generated its signal. Seeing the trading signal generated on the signal chart line up so well with the trend on the trend chart and the currency movement on the timing chart should give you increased confidence in the probability of your trade making you money. Using multiple time frames provides you with more accurate trading information. Better information leads to better trades. Better trades lead to more profits and a happier you.